We all know the Indian jewelry market has long been synonymous with gold, but turns out that might be a bit of a misconception. You see, in 2024 alone, Indians bought more than 2,500 tons of silver jewelry, worth nearly $9 billion. dollars. But this massive silver market has been heavily unorganized. There wasn't a single branded player that had set benchmarks for design, quality, or pricing. That was exactly the opening Ishendra Agarwal saw when he was a consultant at BCG Mumbai in 2018. Today, he's the founder of Giva, a silver focused jewelry brand that's valued at a little more than $2 billion. dollars. Of course, this gap was both an opportunity and a challenge for him. While gold was teeming with established players like Tanishq, Kalyan Jewelers, Malabar Gold and Diamonds, silver had no such stalwarts. Even the largest player, Titan, commanded only about 5% of the total silver market. So, while Bluestone and Caratlane focused on gold and diamond jewelry, Agarwal placed his bet on silver. And in 2019, Jiva was born. His thesis was basically this: while gold may be deeply ingrained in the Indian psyche, silver offers better margins and way higher footfall. As of now, the silver jewelry focused retailer has since posted a year on year growth of around 50%. They have 400,000 daily visitors on their website, and in 2022, they expanded into offline stores. According to business intelligence platform Toffler, they touched nearly 300 crore rupees in revenue in FY24, and in FY25, Agarwal claims to have hit more than 500 crore rupees in revenue. Compare this to Caratlane and Bluestone. They took between 6 to 9 years to reach the same levels. But the thing is, silver prices are rising, and that may be turning Jiva's almost prophetic bet back on itself. Right now, silver prices have crossed the 90,000 rupees per kg mark, and that represents a 20% year on year increase. In comparison, gold stands at about 12%. Higher silver prices mean higher input costs for Jiva, which in turn could translate into much lower margins. Of course, passing these costs on to consumers is not an option, at least not without denting its affordable luxury image. Welcome to Daybreak, a business podcast from the Ken. I'm your new host, Rachel Verghese, and every day of the week, my co host Snigdha Sharma and I will bring you one news story that is worth understanding and worth your time. Today is Monday, the 8th of September. According to Bluestone, India's jewelry market is valued at nearly $60 billion dollars today and could grow to $100 billion dollars by 2028. An industry insider told us that the economics were compelling from day one. Gold jewelry typically carries up to 15% gross margins, of course, due to the metal's inherent value and pricing transparency. On the other hand, as Deepak Tulsian, a jewelry consultant, tells us, with silver jewelry, the margins can be as high as 50%. That's because silver jewelry pricing isn't tied to silver rates the way gold jewelry is. It's sold at a fixed MRP, and that includes making charges as a significant part. That's not all. Now, according to Agarwal, while gold customers typically purchase just once or twice a year, Jiva silver customers buy nearly 4 times a year. That's more than double. Jiva's average order value, or AOV, of Rs 4,500 also means customers feel more comfortable making quick online purchases. According to Bluestone's draft papers, the AOV for gold retailers, meanwhile, is 45,000 rupees. The thing is, the low prices and caratage, that is 14 and 18 carat for gold, ultimately translates to more customers buying impulsively and being more willing to experiment. This willingness to experiment has sparked another Jiva strategy. Rather than betting big on untested designs, it orders smaller quantities of multiple designs, tests the market response, and only then do they restock the best sellers in large quantities. According to Ishendra Agarwal, in this business, it's pretty hard to predict which design will do well. So, Jiva ensures that it launches designs continuously and they only restock the ones that receive a good response. An industry insider tells us that the company has an inventory turnover ratio of up to 4 times annually, and that is pretty impressive, especially when you compare it to the 1 to 3 times for traditional retailers who often struggle with slow moving, high value inventory. Jiva has also been able to grow its product portfolio in leaps and bounds. It has about 7,000 SKUs in silver and 1,500 SKUs in gold. Then, it has lab-grown diamonds which are priced at up to 35,000 rupees. It has also forayed into jewelry for men and children, plus fragrances. They have it all. Now, their shift into lab grown diamonds is also what triggered the next stage of their growth phase offline stores. Stay tuned for more on this. Ishendra Agarwal tells us that while Giva started online, when they expanded into lab grown diamonds and gold, they realized that customers would want to touch and feel those products. Giva opened its first store in 2022, and within 6 months, it had expanded to 30 stores. Its new omnichannel approach mirrors the playbook of Caratlane and Bluestone, but with better unit economics. Largely because it spends only 14% of its overall revenue on rent compared to the competitors' 25%. But according to industry insiders, Jiva's speed may be cause for concern. A former executive of a known jewelry brand told us that it took Caratlane nearly 2 decades to open more than 300 stores. Now, if you compare this with Jiva's 200 plus stores across 6 years, a question does come up. What are the chances that the company would have selected all the right locations, ensured low rent, and built an online customer base that would guarantee quick profitability when the stores launched? The implied answer is, well, pretty low. To be fair though, Jiva's store sizes are quite modest. They started at 400 square feet, and now as their product lines have expanded, they have moved to stores as big as 2,000 square feet. But that's still significantly smaller than traditional retailers whose stores stretch well into the 3,000 square feet mark. Although the footfall in Jiva stores does tend to be higher. At the moment, the company's distribution is 52% offline and 48% online. According to Agarwal, nearly 30% of their online sales come from e-commerce and quick commerce. However, marketplace commissions for e and quick commerce are as high as 30%, and as these channels keep growing, so will the distance between Jiva and profitability. But that's not the only challenge that Giva may be facing as a pioneer in silver jewelry sales. More in the next segment. You see, when you're innovating in relatively uncharted territory, that can come with its own challenges. A jewelry analyst told us that silver jewelry is not very popular in India. It's high maintenance because of oxidization forces over time, and manufacturing costs are also high. Now, Giva has been trying to combat some of this. It uses its plating facility in Jaipur that offers customers lifetime free replating services, albeit at a cost of 399 rupees. The company claims this is India's largest plating factory, and this allows them to control the biggest problem with silver jewelry, tarnishing. Also, as we all know, silver just doesn't offer the same investment value as gold and diamonds. Tulsian, the expert we mentioned earlier, says, even if you melt it down, you'll lose 15 to 20% of the silver. If you spend 1 lakh rupees and the underlying metal is worth only 15,000 rupees, how can it be an investment? For his part, Agarwal argues that the company has positioned silver not as a cheap alternative to gold, but as accessible fine jewelry for daily wear. He explained that if Giva offers daily wear jewelry at 1500 rupees and a person wears a piece every day for say 3 months, the per day investment is around 17 rupees, and that's what customers find valuable. So, here's the thing. No brand centered around silver has taken off to this scale. Even Caratlane's 6-year-old silver brand Shaya remains much smaller. It accounted for just under 3% of Caratlane's 3,500 rupees crore revenue in FY24. So maybe Giva can go where no brand has gone before. But that's considering the very thing that brought it here, silver, doesn't end up becoming a liability going forward.
Daybreak is produced from the newsroom of The Ken, India's first subscriber-focused business news platform. What you're listening to is just a small sample of our subscriber-only offerings. A full subscription offers daily long-form feature stories, newsletters, and a whole bunch of premium podcasts. To subscribe, head to theken.com and click on the red subscribe button on the top of the Ken website. Today's episode was hosted and produced by my colleague Rachel Varghese and edited by Rajiv Sien.